Good morning and welcome to the Prime Cap Daily. My name is Jamie Lezinski and it's Thursday the 27th of September. It's rather a depressing start to the day when one's first topic of conversation is politicians. But ultimately, in the absence of a lot of economic data over the past few days, political sentiment in the discussions and public wranglings between the Conservatives and the Labour Party here in the United Kingdom have essentially dominated conversation. Ultimately, how political discourse relates in this context with regards to Brexit and referenda and people's votes, how this relates to rates of exchange is that on the one hand, markets and rates of exchange or the capital markets globally will probably or possibly take confidence from the increased likelihood of a people's vote on the final deal that Britain accepts or not. That is going to be essentially perhaps positive for business because it implies perfectly plausible to assume that there will be a slightly softer Brexit. Now, the best case scenario for business is in fact almost a do-over of the referendum, rerunning it and indeed a vote to remain, because all of those who initially voted to leave, or some of them, may have regretted their decision. That has played out slightly in the increase in the value of the pound against currencies like the euro over the last 48 hours. So sterling has picked up a touch on the mere suggestion that a softer Brexit could be on the horizon. Now, on the flip side, markets could very well, over slightly longer term, be spooked by the idea of Tories and Conservative Party digging in their heels for a firmer, hard Brexit. So Mrs May, wanting to ensure that she keeps some political clout in the House of Commons, seeks to appease the right wing of her party with a hard Brexit or no deal at all. That scares the markets, and it may very well cause the pound to drop over the slightly longer term. So you have this real almost juxtaposition, this real perhaps catch-22, this soap opera between sterling, euro, US dollar, the Eurozone, and indeed the UK. And that is really what's been dominating conversation, dominating discussion over the past 48 hours. Looking forward to the rest of today. We have, at around about 9 o'clock this morning, industrial, economic and services sentiment coming out for the EU. It's not expected to be particularly positive, and if that's the case, then you may well see the euro drop off a touch against the pound. What is of interest, though, is 2:30 this afternoon you'll see the beginnings of a raft of economic data for the United States. If President Trump's agenda, and indeed the trend being toward growth, then you could see investors take flight towards that safer haven, that growing economy. That could be perhaps to the detriment of the pound somewhat. It may also be to the detriment of the euro, which of course climbed against the US dollar earlier last week to the 117.60 mark. That is a fragile rally. A lot more to be seen, but if you are looking to make payments over the coming few days, then we'd recommend talking to us about what we call a stop loss. It's putting in a limit below which, where it triggered, your transaction would execute. It essentially limits your exposure to a sudden sharp drop in the value of the pound, and we're quite happy to talk about it in more detail. Equally, if you're interested in knowing more about economic calendars and what sort of data is coming to market when times and periods may be volatile, pick up the telephone or do get in touch with your broker at PrimeCap. Alternatively, all of this information is on the PrimeCap Data Center, as is our rate mapping tools, and you can follow us on Twitter also at PrimeCap Brokers. We look forward to seeing you tomorrow. Thank you.